Hello there. Welcome back to Yahoo Finance Live on this Wednesday morning. I'm Brian Sazi, and that right there next to me on the screen is Julie Hyman. Stocks are crawling into the close of the holiday-shortened trading week. We are seeing another day of cautious buying as the Omicron variant continues to spread quickly around the world. Seeing the Dow slightly in the green, S&P 500 and NASDAQ also, again, slightly in the green. I do want to get over to Yahoo Finance's Brian Cheung now for more analysis on that breaking consumer confidence report. Brian.
Hey, Brian. Yeah, well, we're getting a slew of economic data this morning. As you mentioned, the consumer confidence coming from the Conference Board. This is not the University of Michigan releasing their figures showing that the consumer confidence index sat at 115.8 in the month of November. That is a tick up from the 111.9 that they had seen in November. What's interesting was that not only beat the estimates that people had expected for the month of December. Wall Street estimates were about 110, but actually the November revision up is what caught my eye because, as you'll recall, a month ago, the number was actually something closer to 109.5. That was a tick down from October. A lot of people freaked out and they said, whoa, this shows consumer confidence is really slowing because it was 111.6 in October, dipped down to 109.5, but this new upward revision actually shows that the October to November period actually showed an uptick, and the December number that we got just this morning shows that trend continuing to go up. So the concern about consumer confidence doesn't appear to be manifesting as much as it did when people first initially read that November report about a month ago. So maybe things aren't as bad when it comes to people's concerns. Now, of course, one question naturally is whether or not the Omicron variant is going to change that because of the rapid situation, the fact that the flare-up in the amount of cases really only happened as of the last few weeks shows that maybe consumer confidence isn't fully reflective of the Omicron variant, at least in this report. We might have to wait until the next report to get that figure. And then one other thing that's worth mentioning, since we're getting a number of economic data reports, want to point out existing home sales coming in at 6.46 million, a bit lower than the street's estimates of 6.53 million as well. So very busy Wednesday morning ahead of this holiday season, guys.
Yeah, and we didn't mention one of the other reports that was out earlier. Speaking of busy, that was GDP. And, you know, it's not as important because it was the third read of the third quarter GDP. But what's notable here is we did get an upward revision.
We did get an upward revision. It was a small revision, but it was an upward revision. So the last read that we had gotten, again, this is for the third quarter, which covers the July to September period of the year 2021. It was originally 2.1%. They revised that up to 2.3%. Now, again, for comparison, that is a lot slower than the 6.7% that we had seen in the second quarter of this year, which covers the March to June period. But that was very much expected because, again, a lot of that fiscal relief was a little bit more pronounced in the second quarter, also in the first quarter of this year. We know that the unemployment insurance was starting to fade as of some periods in that third quarter. So no surprise to see that economic activity was slowing. What is interesting and something that I always frequently remind people when we talk about GDP is that the 2.3% figure doesn't mean that the economy grew by 2.3% between the second and the third quarter. What it means is that if you were to take the pace of growth in those 3 months and then extrapolate it to a whole year, it would be 2.3%. So just keep that in mind when you're reading these numbers. It's not like it's necessarily that easy to understand exactly how to translate those into year-over-year figures. It's not really until we get the fourth quarter reading where we can kind of take a look at the whole year 2021 and say this is exactly how much the economy grew by. But again, this is the third estimate, a little bit more pinpointed and accurate than the other readings that we had gotten for the third quarter, guys.
Duly noted there, Brian. And I know you're also locked and loaded on a PCE inflation report.
Absolutely, yeah. So and that's going to come tomorrow. So again, we still have more data releases to come for this week, but a very important read on personal consumption expenditures. This is one of two major readings on inflation. And we already know what we had gotten from the consumer price index showing a very, very hot print in the month of November. PCE takes a little bit longer to process, but the expectation for tomorrow is that on a month-over-month basis, at least in the month of November, prices are expected to show an increase of 0.6% on a month-over-month basis. On a year-over-year basis, the so-called PCE deflator is expected to show 5.7%. Now, that's lower than that 6%-ish reading that we had gotten on the CPI, again, the other alternate reading of inflation. But we have to keep in mind that PCE and CPI read prices a little bit differently. Generally, the interpretation is that CPI tends to read inflation at hotter levels than the PCE does. So it's a little bit expected for it to be lower than what we usually see on the CPI. But 5.7%, guys, important to remember, that would still mark a very hot print historically. Keep in mind that the last print that we had gotten on PCE for the month of October was 5% on a year-over-year basis. And guys, last time we saw a number that hot, 1990, before I was born. So we'll have to see if that number clocks in even hotter than that when we get that number tomorrow morning.
Well, Brian, last time I saw a Binax COVID test were really 3 weeks ago. Where'd you get that one behind you?
No, here's the thing is that I feel like I like to call what's behind me the flex shelf. It's usually the hottest sneakers on the street, but the thing that's hottest right now is one of those rapid COVID tests. So I figured I'd pop it on the flex shelf for all of our viewers to see as well. I'm not going to flip that, though. I'm not selling that on StockX. Don't worry about it.
Okay. Brian Cheung,
you probably
correspondent flexing with his Binax COVID test made by symbol ABT. Brian Cheung, be the man. See you later.